I think what we've seen is for the first half of 2024 back into 2023, regulators have been interventionists in a lot of ways, right? With respect to banking. The increased capital requirements on banks of all stripes, particularly mid-market firms. What we saw then is a contraction into a risk management, sort of coverage mode toward the end of 2023, early 2024. We saw, basically securitization and a sale of lending risk by a number of mid-market regionals and super regionals, even you might say, sort of low end of the top 10 financial institutions. And so I think regulators have, in an increasing interest rate environment in light of a handful of bank failures, really enhanced their focus on bank operations. One of the major ways they've done that is, looking at distributed risk in financial systems broadly, one of which is third-party solutions delivered under a bank banner, which, makes perfect logical sense from an ecosystem approach at the management level. If you're a business owner in a bank, it makes sense. We're not going to make everything ourselves. There are things I can take off the shelf that make a lot of sense for me to sell to my commercial clients and to my consumer clients. The flip side of that is I'm selling them and they're under my name, but I'm not actually delivering the service. So, what they've been hit with from a regulatory standpoint is guidance that says, hey, you're kind of on the hook for what your partners do with your customers. Fortunately for them and for us, our platform at Ovation delivers not only that service governance oversight, but also the ability to optimize that ecosystem and grow differentially in the marketplace because you can deliver a uniquely bank branded experience through it.
When you look at what's happening and why this, sort of like what was the predicate to all of this regulatory information coming out? One is you've got a current administration that's not interested in innovation is stifling it. That's just a fact. And that's coming through on the regulatory, from a regulatory perspective. The second is that, I think where this started was really banking as a service or embedded finance, right? So when you started to look at, the services getting embedded into software that consumers and businesses use every day. I think I heard a couple of weeks ago that 7 banks were served notice. They had to stop doing it. So this was back to my first point, right? So, how are they supposed to innovate? This is a major opportunity to provide more financial access, provide better solutions, better services to businesses, small businesses and consumers, yet we have, once again, the government getting in the way. As a result, banking as a service, embedded finance, interchangeably fundamentally means that you're working with third parties. And so I think this third party risk thing came out as a result of the banking as a service kind of efforts that were going on. Now, not to say that it's not important. We think it's very important. We would argue that, where the majority of the effort today is around the certification of a third party, that actually the issues are on an ongoing basis and more attention needs to be spent there.
In a regulatory environment where I'm responsible for the actions of my third party partners, as a compliance risk management executive inside of a bank, I'm kind of flying blind, right? I mean, I've got SLAs, and I only know, it's like a tripwire. I only know that you've hit those when something's gone wrong, and I'm getting, sort of as Chip said, monthly reporting after the fact, as opposed to real-time data that I can take action on, and perhaps mitigate, improve experiences, get ahead of challenges instead of responding to them after the fact. So it has both created, again, I think a regulatory burden and a headache for, those parts of the bank that are responsible for keeping the institution in the right lines with regulatory bodies. But it also has created opportunity for business owners to say, look, I've got tools out there, of which our platform's one, uniquely perhaps suited to it, that can give me that real-time oversight and management. And at the same time, on the flip side, on the revenue side of the business, which is why we're all here, right? I can actually distribute access to third-party solutions and democratize access to banking across a broader population of clients, because I have this visibility and the ability to orchestrate their actions as if they were part of my organization. So yeah, in every challenge there's an opportunity, and I think we're seeing both sides of that in the conversations we're having in the market.
There's a give and take there, a push and a pull between, line of business owner frustration on trying to drive, new business to grow, deposits, and sort of the methods that, risk and compliance will say are okay to do that within. So what we propose is some harmony. And the harmony is a solution that a line of business enables a line of business to do what they want, at the same time giving the compliance team what they need in terms of real-time visibility. And so they can join and be partners to drive the business forward versus at some points seeming more like an adversarial relationship. And that tension's important, but it doesn't have to be. And we think there's a solution and there's infrastructure that can help solve for that.
Every interaction with your organization is revenue accretive or attrition driving, right? I mean, an experience of a bank after I've signed up for something is my ongoing experience of using the product. And if that third party product goes poorly, my experience of that goes poorly, then my impression of the bank goes poorly, right? And so it increases the risk of revenue loss, it increases the challenges in growth. And I would say that, we see the same thing from a risk perspective, which, Chip can speak to, which is, that, if you're not managing the ongoing delivery, you're not actually capturing the true risk to your business.
I would say the systems on, all sides of this equation haven't been built. The existing systems haven't been built to solve for this, right? So you have, which is why you end up with these, spreadsheets, and you end up with phone calls and, very, very antiquated ways of looking at it. I mean, as far as can be from like AI, right? And where we are today. So, there's service providers that serve multiple banks. They have the data that could be considered complaint data commingled with other banks. They can't track any of it. And so there's, they've done that for their own operational efficiency. And so you really gotta, as a bank establishes relationships with these third parties, they really need to, as part of that, include, this infrastructure that can provide the real-time visibility, can provide the collaboration, can provide the communication that they need to address these and monitor these kind of ongoing activities. And if you have a good system, that system is also going to apply sort of pattern matching and use AI to go flag things, right? This is not customer facing. This is like, how do I actually recognize at scale issues that are happening in my ecosystem? And that's a great internal use case for AI. And the infrastructure that you put in place for this should have all of those things.
As banks and their third party providers, sort of open up visibility to each other on what they're doing with shared customer, the outcomes are better for both organizations and for that client, right? So it's not so much I'm going to watch what you do and I see what you're doing. It's we're both working together because we're ultimately on the same team to deliver a solution to a client that brings us both, revenue and reputational benefit in the marketplace. And so we see that as, much more of a win for both sides than, sort of an adversarial vendor client relationship from a financial institution standpoint.
Step one is getting all of the data that's across your ecosystem into a place that you can apply AI for. That's like we've been kind of referring to as infrastructure, right? And I would call it data aggregation. A lot of people would call it data aggregation, and speaking for ourselves, that's what we do at some level. We're a data aggregator. We talk about orchestration, but we're really aggregating data so we can orchestrate it. And so, the data, once you've aggregated the data, then you can start to look at anomalies in specific, use cases, whether it be like someone rolls out an update to a product and there's a lot more issues or complaints or more cases are created, you can flag it, right? And something where, when there's a high level of volume, the value of AI is it can, in milliseconds, identify things that would take humans maybe a day to identify, right? Because it's just the time it takes us to read and synthesize and process it versus machine doing it. So I think there's great opportunities to once you've got a good data aggregation partner, and I'm not talking about the Plaids of the world, I'm talking about specifically your customer experience platforms that help you manage customer experiences like ours, then you can start to drive workflows that identify things and drive, proactively alert, a bank to investigate something, or, notify the service provider that their banking partner is going to give, more complaints, which is, not good for anybody. Most importantly, not good for the end customer, which is what we should all be focused on.
I think another fascinating use case for AI that we've seen and that's super powerful, right? And every account manager, senior exec, business line owner in a bank has had this experience. Hey, I'm going in to see client X, corporate customer Y. What's going on with them? Where are we? How are we doing? Okay, well, let me tell you what that experience used to look like before the platform that we deliver. All right, I'm going to go through about 15 different systems. I'm going to talk about 30 different people. I'm going to have email threads that are 75 pages long, trying to piece together what's been going on with this client, what's going well, what isn't, how, basically getting a snapshot of client health. And with the aggregation of data that you have to do for the orchestration that we provide, you can apply an AI engine to say, give me a quick, unbiased paragraph or two on where we're at with this client. What's happening? What journeys are they on? How's it going? Where have we won? Where have we stumbled? And what could we do better? And you can get all of that in a handful of seconds. That is a powerful, powerful use of AI that isn't customer facing, it's internal facing, but it absolutely changes the game for how you compete in the marketplace as a bank, because you know how you're doing with your customers at the flick of a switch. The same capability that allows you to say, give me a quick AI summary of how we're doing with this client in terms of where's my next best opportunity and what pitfalls do I need to be aware of as I'm walking into the C-suite of a corporate customer. That same capability can deliver to a compliance officer, okay, something just went massively sideways with a client and I need to know how and why and what are we doing to remediate and what's our next best action to make sure it doesn't happen again. Same aggregation of data, pooling through tons of journey information and interaction data to say, hey, here's what's happened over the past 30, 45 days with this client, or here's the story timeline of a journey this client was on and where things fell sideways or where things, fell apart, or we stumbled or our partners stumbled. Being able to piece that together through the application of a generative model to existing journey and client data is a huge improvement over the way it works today, which is I round up about 50 people and I look through a ton of emails and it takes them a week and a half to tell me what I could have found out from a system like ours in about 30 seconds. The application of our platform has been primarily against business owners who are trying to drive results in the marketplace increasingly through a distributed ecosystem delivery model where I've got partners and I've got to manage them as if they're me. But that same infrastructure that drives all those great business results, increased revenues, lower attrition, higher NPS, lower costs, all of those things, lowered costs at my partners because it's cheaper to do business with me because of the efficiency we get from that interaction. All of that benefit, flip side, accrues to the compliance and risk folks who need to be monitoring how well that partner is doing against the obligations that we've set for them at the front end of the sort of risk approval process when we establish can monitor through the same platform because it's all the same data. One is how do I grow? The other is how do I make sure I don't stumble? And both parties, the business owner and the compliance officer, are interested in that same outcome. From an IT owner perspective, I've already got legacy investment in a ton of extant, relatively brittle and not fit for purpose systems. And how does adding you help me without creating more headache? Right. And so what we've done to mitigate that challenge is to say, look, we get most of the experiential data we need from a handful of existing market standard systems to which we've already built pre-integrations and rules around data aggregation and data synchronization. And we're an overlay for the systems that you've got today. You don't have to rip and replace anything in order to change the way a customer experiences your enterprise. All you have to do is just lay us on top of it and let us orchestrate the activities of these siloed organizations inside your company, the systems they live in, and the third party external partners you've got, so that you can have a true end-to-end management construct across what would otherwise be, a distributed silo mess. And today, without our platform, a customer traversing that distributed silo mess feels it. I mean, it is, oh, I got there, but man, was it painful. When you could make it purpose built, managed, orchestrated, and an intentional process for the customer to accomplish something with your enterprise.